Guys, any asset that we have in the business will be recorded at cost price. And I did say that it'll increase or decrease at cost price. So any asset will increase and decrease at cost price, okay? Now, the asset will increase at cost price plus any directly attributable cost when it is purchased and decrease at cost price when it is sold. Somehow, guys, when I start doing asset disposals, people forget this thing. And that is because, guys, we are applying the historical cost principle when it is sold, okay? What did I say directly attributable costs are? Directly attributable costs. So your asset, you will recognize it at cost price plus any directly attributable cost. What do I mean by that? Exactly. So anything that, any cost you incur to make sure that asset is in working conditions. Okay. Any cost you incur to make sure that asset is in working conditions, you will include it into the cost price of the asset. And guys, we have what we call an asset register. I asked this in a recent test to grade 11s, grade 12s actually, as to what the asset register is. So the asset register is basically a document that records all movements relating to the asset, okay? It records all movements relating to the asset. It records all movements relating to the asset. That's where we record all movements relating to the asset. Give me movement that relates to an asset. Like what will cause the cost price of your asset to change? Or what will cause the value of your asset to change? The more you use depreciation. So in there, you're going to include the depreciation method. You will include when that asset was purchased. And then you will include things like the residual value of that asset, the cost price of that asset. And I did specify the depreciation method, right? So we have two methods and we'll talk about them. So this is what asset register will include. It will include additions of the asset. What is additions? So how are we going to have more assets? When we buy. Additions means we are buying. Depreciation, can I depreciate land and buildings? It appreciates in them, but guys, when you go to varsity, here's a shocking thing. Land and building does depreciate, but only at 2%. Okay, only at 2%. And it's not applicable to all their buildings, okay? It's when there are certain conditions that cause you to depreciate that building. And then we've got disposals, guys. When we talk about disposals, what do you think we mean by that? Yes. What do you think we mean by that, disposals? What do we mean by disposal? The things we don't need. Here, it means that it's either we sold the asset or we got rid of it. Okay, got rid of it because it's not working for us anymore. That's what a disposal is. Either we sold the asset or we got rid of it. Okay. Can I continue? For us to depreciate an asset, we need to figure out how long we're going to use that asset. The length of time in accounting, we call it the economic useful life. It's how long you expect to use that asset and, well, the benefits you expect from that specific asset, okay? Now, it is basically the period over which the entity expects to use the asset. That is what economic useful life is the period over which the entity expects to use their asset in order to generate economic benefits. When you talk about economic benefits, we're talking about cash for the business through sales. Now, the useful life is determined by the period over which the entity expects assets to generate inflows of economic benefits, okay? Note that depreciation rate is determined based on the useful life. I won't get too much into this because it's a little bit complex for you guys. Now, we're going to talk about the sale of fixed assets later on. I won't deal with this now. I will talk about it when we deal with the sale of fixed assets. I just want to talk about the calculations, okay? When we calculate depreciation, guys, it's either we use the diminishing balance method or we use the cost method. So diminishing balance method has 3 names. Actually, it's 4, right? So it's called diminishing balance method, reducing balance method, carrying value method, or book value method. All of these relate to the same method, okay? It means that depreciation will be calculated on the carrying value. That's what it means. It means that depreciation is calculated on carrying value. Now, you need to calculate depreciation up to the date the asset is sold. Meaning that for as long as you've got the asset, what must you do? Depreciation. Until you sell it, until you get rid of it. Now, you're probably asking yourself, what is carrying value? Carrying value is cost minus accumulated depreciation. And probably there you're asking yourself, what is accumulated depreciation? Do you agree that you will depreciate your asset every year? That added depreciation of the asset, we call it the accumulated depreciation. So accumulated depreciation is the sum of depreciation of the asset from when you bought the asset. When did I say you will stop depreciating an asset? When you sell it or get rid of it. Okay. When we say get rid of, guys, I don't know if you have it in your family, but I've seen this in a lot of households in the township where you have an old car parked outside. Interesting. It's when you have that vehicle that you're not using and you put it outside. So it means that what have you done to that vehicle? You disposed it. But did you sell it? No, you disposed it. Same as you. When they bought you a new iPhone, what did you do with the other one? And what are you doing with 2 phones? But you don't have a phone. Where is it? Why not? That's a good thing. It is a good thing. I used to have a phone as well, but when I come to school, I will leave it at home. There was no point for me to have my phone at school. There was just no point. Who do you talk to? Because you're here to learn. Anyway, guys, depreciation is on diminishing balance method or it is on cost price. So I will show you both methods now. Okay, so basically depreciation on cost price, you just take the cost price of the asset, you multiply it by the depreciation rate. Can I move on? Guys, this is the asset register here. I gave you when this vehicle was purchased. And depreciation is on cost price. The depreciation rate is 20%. What does PA stand for? Per annum means per year. So whenever you calculate depreciation, it will always be per year. We'll talk about that shortly. The cost price of this asset will be 650. I need you to calculate depreciation of this asset up to the 31st of December 2017. When did we buy this asset? And when am I asking you to calculate depreciation? 2017. Now, how would you calculate depreciation here? Based on the method. I said here, depreciation is calculated on cost price. Anyone? Yes. $650 times 20%. You're right. Now, did we really use it for 11 months? Count. 1 January. So we have to include January, February, March, April, May, June, July, August. I can't do the 9 still. September, October, November, December. No, but look at the date there. What is the date there? Okay, guys, I said you must calculate depreciation up to when here? 31 December. I asked you to calculate depreciation up to the 31st of December. Yes. Okay. I don't know what they have done here, guys. Spotlight, bed, text. Oh, this is what I mean. Okay. I guess you guys want me to move this to this side. Okay, do you see the date that we are preparing these things, guys? We're preparing it on which day? On the 31st of December. So do you agree that I'm going to depreciate it for the entire month of December? So my current year depreciation will just be 650 times what? 20% times 12 over 12, because I use it for 12 months. Is it important really to include 12 over 12? No, because what is 12 over 12? It is 1. I'm just showing you that, guys, if we had used this for 11 months, it was going to be 11 over 12, because we only use it for 11 months. And the rate is always per annum. You don't, yes. Come on. Like me. Oh, you know what? I wasn't supposed to have done this like this. I was supposed to be one school copy. I didn't think that you're gonna need to write all. Okay. I didn't think you will need to write all. Okay. Guys, sorry for that. Sorry for that. So how much do we get as depreciation? 130,000. What did I say accumulated depreciation is? What did I say accumulated depreciation is? It's depreciation each year. At the moment, how much is our depreciation? It's 130. So accumulated depreciation will be the same as depreciation. How did I say we calculate carrying value? Let's see who's not broke. Yes. Yes. Exactly. So how much will be our carrying value here on the 31st of December 2017? It's going to be 520. It's 650 minus 130. It's 650 minus 130. So basically it is this 650. You minus the 130, then you will get this 520. Okay. Now let's go to December 2018. How do we calculate depreciation for that year? It depends on the method. The method said we must use what? Do you see? It's on cost price. So depreciation is always on cost price. So it'll be 130,000 again. So what will be our new accumulated depreciation now? 260,000. What will be the carrying value? No. What is accumulated depreciation? What did I say accumulated depreciation is? Is the sum of the depreciations. So already our accumulated depreciation was at 130. So I needed to add this year's depreciation. Do you get it? You add the 2. and then it'll give you the new accumulated depreciation. Yes. How did you get that 390? You took the 650 minus 260, and what did you get? 390,000. Depreciation on the 31st of December 2019. Still the same. It's 650 minus 260. Okay, so it'll be 130 again. What will be accumulated depreciation now? It'll be 390. How did you get that 390? Beside that, you take last year's accumulated depreciation. You add this year's depreciation. Did you all hear that? Last year's accumulated depreciation plus this year's depreciation. It'll give you the new accumulated depreciation. Why am I not adding these 130s? Because already they are in that 260. Do you guys get it? Exactly. Both of them make the 260. So what will be the new carrying value now? No. It's 260. How did you get it? 650 minus 390, it'll give you 260. For 2020, how much will be our depreciation? 130. What will be our accumulated depreciation? 520. What is the new carrying value? 130. Remember how you get your carrying value. It's always cost minus accumulated depreciation. Cost minus accumulated depreciation. Yes. 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 So here when we depreciate for 2021, what's going to happen? It's going to be the same amount. But do you notice that if I record it at 130, I'll end up having carrying value of 0. Guys, you are not allowed to have a carrying value of 0. I asked this question in grade 12, and the answers that I gave, I was given there. They were giving, They were giving what vibes. It can't be 0 because think about this Yaris here, right? The value of that Yaris is 0. But am I not making money by using this Yaris? I'm still. So that's why it can't be 0. So basically, any asset will always have a value left in them. Yes. Now, in that case, I will still depreciate it. I will always depreciate it, but the carrying value will always be 1. And immediately when the carrying value is 1, I stop depreciating. So that's when it's idle, you're putting it out there, and then there are reds there, and then. And it's very dangerous to do that. Not long ago, I read that these kids were playing, and mistakenly, they locked themselves into an unused car. And it was hot. So you can conclude what happened. What do you think? It's not just that. There was another story of a mother that went into a mall to buy things and left the child in the car. Even if you open windows, it's still not enough, especially if a child is still young. You can't turn on the aircon, you're left with a key. Yes, they die. You die. You suffocate to death. But do they lock windows and everything? That means your parents' car was a skorokoro. Do you know what a skorokoro is, right? A skorokoro is that car, even when the windows and the doors are closed, there's still air coming through. So there's mbobo somewhere. Okay, guys, here's the thing. I can't have the carrying value as 0. I said the carrying value can only be 1. It means that for that year, I must limit my depreciation. Are we together? You must limit it to accumulated depreciation of the previous year minus 1. What was accumulated depreciation of the previous year? 130. So you're going to limit this year's depreciation to 130 minus 1. What is 130 minus 1? 129,999. Guys, make a plan. Make a plan. Make a plan. Stop complaining.